all CEOs, me included, we don't actually know what we're doing.
They're all sharks, so all you got to do, though, is know shark behavior.
I don't think we've ever talked about this before.
We can capture all of the wallet share.
First place you start is with the product.
That's just the first note.
This is the Capital Stack.
Hey everybody, this is David Paul, the host of the Capital Stack podcast, where I talk to founders, operators, and investors about all things value creation. I want us to take this show and make it more of a vertical SaaS show, and Jon's my first foray into that. I just saw Jon, we share a co-working space. I saw him outside, and he was bragging how big his pipeline was. Jon, how big is your pipeline really?
It's, I'll say this. It's 6x what it was in Q4. So we're doing well.
Nice. Yeah. What was your learning curve? I mean, just like, I mean, like we're going straight off into like operational stuff, but how is your learning curve around pipeline like evolved from like when you first started being a founder to like now? Because I feel like there's like an evolution of like what pipeline is and what it should be, et cetera.
There are so many facets to that because I didn't come from the insurance industry. So in order to even think about selling a product and delivering a product and onboarding customers, I had to first learn the space. And my co-founder, he does come from this space, but he is very much, he has an insurance brokerage background. He's not a product person. And so I actually onboarded our first 80 customers before I could really get my grips around, like, how are we going to go after this space? And there were a lot of lessons learned there. And then once that point hit, then you can actually start talking about sales processes and pipeline and things of the sort, because you understand the nature of the beast of your industry. And I've always been, so interested in the operational side of sales. I'm not the type of person that can get in and help a pitch if you're doing a cold call or maybe doing a demonstration, but I'm definitely the type of person that can create a funnel, handle all the operational metrics, and figure out, the different parameters that are necessary to improve in order to increase pipeline. And what I found for our kinds of processes, we do a lot of outbound sales, is it's either you need more leads, more conversations, more schedules, or more people to make the demo. And if one of those operational metrics are off, you're focused on that.
Yeah, no, I think it's kind of like a whack-a-mole, right?
Yeah, exactly.
It's like, I don't think scales ever, like, I don't think anyone's like, it's like everyone, like, there's different varieties and variations and degrees of scale. Like, I think everybody's just, it's like golf. You're never really happy with your game. There's always areas to improve. So why don't you give us a little bit of background on yourself and Xilo?
Yes. So Xilo actually wasn't my first startup. I would say it was my first real startup. I started a company right out of college called Atlas Rideshare. And the whole goal was we wanted to get people to be able, college kids to be able to ride share home together on vacation. And then our vision was we were going to basically do what BlaBlaCar does in Europe here in the United States. And people would be carpooling all the time. My co-founder at the time, also one of my childhood best friends, was a Naval Academy student. So we had about 6 months before he was being deployed, and he had no access to technology to be able to continue to code on the platform before the whole thing would go under. And unfortunately, it went under because we did not raise capital. We did not know how to raise capital. We did not have paying customers. We had thousands of users, but no monetization strategy. And so that taught me a super valuable lesson. It's probably the first thing that I ever actually let fail in my life, because I'm the type of person who likes to beat down the door. I don't like to quit, but I had no knowledge of how to build software. And so that made me want to build software. And so I spent about 2 years. You
weren't the technical co-founder at that point. You were just a founder.
No, I was the marketing guy.
Okay. I never saw you. I never thought of you in that light. Okay.
No, this was about 8 years ago. And so I've been on this long journey of self-taught programming. I also attended some classes at Penn when I was, in Philadelphia to learn about some of the fundamentals. But ultimately, after about 3 years, 2 years, I think, I moved to San Diego, on a whim because my original co-founder was out here. And I was like, oh, California, California is much better in the tech scene than Philadelphia is. And I took a job at a company here called Parallel 6, and then eventually became a software engineer at that company. And in about a year, so about a year in, I got the itch to start another startup. And that's when I started talking to my co-founder, Ellie, who's also one of my childhood best friends, about his industry, about the insurance industry. And as I looked under the hood, I saw so many problems that were ripe for solutions built, by software. And that was ultimately the genesis of Xilo. And so that we started the company because we knew that we could really help the industry.
And what is the problem set and solution that Xilo helps with?
I think the simplest way to put it is that, in the insurance industry in particular, there are a lot of really mundane tasks that everyone let me take a step back really quick. The insurance industry is evolving pretty aggressively. There are a lot of players out there who have started this kind of wave of online insurance sales. And there are a lot of players completely outside of the industry who've started.
Failed, right?
Yeah, exactly.
Yeah, the InsurTechs, that was a really bad hype cycle.
They ignited something, though. They ignited the Amazon effect, right? Tell me why we live in a world today where you can literally get an Amazon package faster than an insurance quote.
Yeah, or open a bank account.
Exactly. And so if you look on the other side of things, you have a lot of different people handling a lot of mundane work, using a lot of pen and paper. It's a lot of terribly inefficient processes supported by kind of older software. And so everybody's completely backed up. Now, if you look even back in the last 2 years, the industry has gotten even crazier. Premiums have gone up, inflation has gone up, fraud has gone up, losses have gone up. Carriers have pulled out of all these different states. And so what looked like a really hard workload for an average insurance broker or agent is now 2, 3, 4 times as harder. And let me add one more variable into the mix that's extremely compelling. Insurance agents are retiring every single day. The average age of an agent is anywhere between 45 and 55. And so in the next 10 years, you're going to have a lot of veteran agents that are retiring. And so you have these insurance organizations that are obviously trying to grow some percentage year over year while keeping gross margins in a good and healthy place. But their all-stars are retiring. So how do you then replace a very experienced licensed agent?
Just to be clear, this is like property casualty, or this is P&C. This is like business insurance. This isn't like auto insurance.
It's on all ends. Independent insurance agents sell a majority of P&C premiums, and they sell a lot of commercial, but there's a lot of them in personal lines as well.
Okay.
And so, but in general, you mix,
but not health.
We actually, a lot of our IAs will use us for life and health too.
Okay.
But it's if you look at like a life only shop or a health only shop, they're a little bit different than your P&C kind of predominant IAs. But in general, when you mix those 2 problems or 3 problems, industry is evolving, tons of mundane work in antiquated processes, and then agents retiring, you get a recipe for disaster. And so we're building solutions that secure, our market, our customers for the next 10 years by automating as many processes as possible and bringing them up to the forefront of what consumers expect in a modern insurance world.
And so if I was to probably wrongly describe your product, I would say you're offering, a really great customer experience on the form submission side, and then that automatic that data pull that you're getting from the customer side, that engagement you're getting, you automate that workflow into legacy back office softwares and processes to make it easier for the agent. Yes,
I would say that's a point of what we do. Right. Xilo I think we have 5 products now, and we're going to continue to add more products. And I think the pattern of what we offer is you have both customer facing technology and, back office facing technology. On the back office side, we're trying to automate as much as possible. We're trying to remove clicks, integrate data, format and convert data. And on the front office side, we're just trying to provide the absolute best experiences for our customers so that they're willing to work with our customers.
And so how do you describe, just for a layman, how does insurance work? You have brokers, and then you have the actual companies that do the underwriting and are essentially the balance sheet in the calculator. Like what's the value chain in insurance?
Yeah, so at kind of, I wouldn't say the very top, but right there at the top are the insurance carriers, the insurance providers. These are your Progressives, your Nationwides, your Travelers. They're the ones actually insuring people and businesses on their products and their entities. Now, a lot of them will work through an independent insurance brokerage. And so this is, a fiduciary for the consumer that can help simplify understanding risk and what types of insurance you need, what coverage you need, so that when you as a consumer, David and me and maybe Xilo as an entity, when we need insurance, we have someone that can simplify all the complexities of insurance and the coverage we need for us. Mm-hmm. This person, sells also on behalf of the carrier, and so they get kind of a cut of the premiums that are paid by us as consumers. But that way, we don't have to do our own shopping. We don't have to understand our own coverage, our own risk, our own products. Someone will do that for us. And then just one more caveat there are also captive brokers and agents who sell for one single carrier, like a State Farm, for example. And they do the same thing, except for they're not doing it competitively across multiple carriers. They're just doing it for State Farm.
Okay, gotcha. And how does the economics work with that? So, insurance is essentially an actuarial process where groups of people put in money, and I just like to understand the value, like the business models behind this, because ultimately, I think insurance carriers are huge customers, right? But like they don't really often get looked at. It's usually looked at on the agent side, and especially because these things are just behemoths, right? So. What's the business model? I collect tons of premiums and I pay claims out on some of them and I make a profit, right? And then I use I use either captives and or independent agents as my customer acquisition strategy. And then how do they get paid?
The carrier or the broker?
Yeah. So what's the difference?
Oh, I see.
Oh no, the broker. I guess the broker, right?
Oh, the broker.
The carrier is the carrier gets paid on premiums. How does the broker get paid?
The broker gets paid a commission, just like a sales rep.
Got it. Okay, and it's an annuity type stream.
Yeah, exactly. Now there are different caveats. If your book of business has less than a maximum of losses, you get bonuses. Probably very similar to salespeople, but it's all commission based for the most part.
Oh, interesting. So if I'm a broker and I start having claims, I could potentially get dinged, right? That's why my insurance broker always tells me not to file a claim. That's interesting.
You have some sort of threshold, and I don't know. It depends on the carrier, really. But some carriers will actually completely eliminate your appointment if you're bringing them very bad business. One of the big points of a broker is they're also supposed to be selective on who they're bringing in and the carriers that they're aligning them with. They're also trying to make sure that there's a good carrier customer fit when they're doing their job, because it helps drive bonuses or keep appointments. So there's definitely some security.
You're supposed to be agnostic, but it's a crazy industry. It's a crazy industry. So on the fundraising trail, how did you're taking venture capital, right? And being that, venture, there's varying degrees of how venture-y, quote unquote, somebody is versus kind of like growth equity. How do you think of where Xilo will fit? Where's Xilo's home? How do you think about addressable market?
In terms of how we want to grow the company?
Yeah, no, exactly. Because you're a vertical SaaS company, and there's very few vertical SaaS billion-dollar companies out there, right? So how do you think about justifying TAM if you're going to go super the super venture route, or do you not think about that, right? Do you feel like, hey, this is going to be a $200 million company, and we're going to capitalize it like that, and we're going to have a great outcome?
I think, vertical SaaS I think it's unique for each industry. Insurance, luckily, is a really big vertical, right? And it's also an expansive one. And there are a lot of people that are entering into it. And so maybe 3 or 4 years ago, our primary focus were kind of small independent insurance agencies. And then about a year ago, beginning of 2023, we started to just focus on the larger mid-market and jumbo brokerages in our space. And ultimately that unlocked, let's say we cut down the weeds in the forest, and then we all of a sudden saw a whole different city. And so now we have a lot of banks and credit unions, and I won't mention any names, but people that are affiliates of the insurance industry that are really big logos that you would know that you probably see every day. Yeah.
I didn't realize there was affiliates in insurance.
Yes. Yeah. People that just distribute. And for various reasons, it might be for revenue purposes, or maybe it's for their own risk mitigation, but at the same time, their entrance into the space. And so this vertical is a really healthy one to be in. I think you can, and this is Xilo's goal, you can be a true venture-backed company. You can grow to a very extremely large revenue mark in this vertical space alone. And I get asked that question all the time. Like, do you think about other industries? Are you guys ever going to, service the financial services industry broadly, or maybe real estate? And I tell them, of course, but it's more of a 10-year plan than a 5-year plan. But even today,
you feel like there's just so much opportunity.
Yeah, we literally had a customer 2 days ago a prospect email us who's super excited about using us. They're a typical credit union that has a longer vendor management process. And they said, hey, sorry, this is taking so long. We're actually evaluating you for the entire credit union, not just for the insurance department, right? And so I think if you just hang out long enough and don't quit in your vertical space, eventually you'll start to find other fits for your, for what you're doing.
If you just listen to your customers, right? Like, right. And they like you maniacally, if you have a maniacal culture on customers, they'll tell you the roadmap.
Exactly.
Right? You don't need to be super creative.
And I think another important factor is, and I'm a fledgling founder, right? I had I wouldn't call it a fake startup. I had a baby startup, and then I had this real startup that I've started. And this one we've been in for 5-6 years, and the industry has changed before our eyes. And I think one thing that early stage founders probably discount is that your industry will change.
Okay.
And I think that changes things.
And so you've raised some seed money, and is there an A in your future?
Yeah, for sure. We'll be raising an A. I won't say when, but we will be.
Okay. So it's in the ethos. What do you look for in an investor?
It always comes down to, I would say, 3 things. It's access to more and future capital, just because that's our plan. Access to talent and access to customers. And so anyone that can provide 1, 2, or 3 of those things, to me, is a value-added investor. I love the advice that investors can offer, but after a certain period of time, you're kind of no shortage of advice. Once you prove yourself to some degree, a lot of people are willing to help you.
Yeah.
And I think after a certain point, too, you have to start going with your gut and intuition as a founder, because you've gotten so much advice.
Advice is cheap.
Exactly.
Yeah.
But those are the 3 big things that I think a lot of investors can add, for sure.
Advice is cheap, but like bad advice, like good advice is I don't know, super valuable, but I know bad advice can destroy your company. That's for sure.
Yeah, it can. And, a lot of times you'll hear the same thing over and over and over again. And it's really hard when you're in the thick of it to take that advice. But one thing that we heard early on was that we had to move up market. And it confused us because a lot of the unit economics were healthy, right? Like if you looked at our sales efficiency, it was extremely healthy for what we were doing, especially in an outbound process, which surprised a lot of people. But then when we ultimately, I wouldn't say listened, but we also ultimately made that decision to do that, everything skyrocketed. And so that, I will say that advice can come in handy, but at the same time, getting there, like there was a long period between like doing it and getting there.
Yeah.
And a lot of that was gut intuition, founder working, 16-hour days. Like it wasn't easy. Advice was like the tip of the iceberg, if it makes sense. And so what could have helped us get us there faster? More money, more customers, or more people.
Right. Exactly. Yeah. And so how do you think about your market segmentation? How many big jumbo carriers are there, from your price point perspective?
Well, in our space, there's, if you're just looking at the P&C market, there's like a top 100 list. But there are probably 10,000, what would I say, mid-market to large brokers per se. But we try to do a different type of math. We look at the industry as a whole. And in the U.S. alone, this isn't even talking international market, there are about 1.5 million producers. This isn't including service workers, account managers, other potential users in the space. And at our current price point, not any future price point, you could almost have $3 billion in ARR just on those producers.
And what's a producer? How do you define a producer?
Sorry, a producer is like the sales agent. It's an insurance agent within a brokerage that actually sells and produces.
Got it. So you're saying that, like even if we didn't have to go from a tops down approach to sell into a company, we can go from a bottoms up approach and still give pieces, scale down versions of the product, add value even on the rep level.
I think the winner in this market will do both. Yes, I agree. I think that completely. I think you'll have a motion that's more self-servicing and marketing led, but then you'll have what we're doing really well at right now, which is more sales led, more handheld, enterprise onboardings, but also bigger contracts.
So tell me, what are some of the things that you know now that you wish you knew earlier?
I would say there's like a whole year's worth of lessons learned about selling up market that I wish I knew. Right? Just the importance of security, vendor management, how to run more of like an enterprise. I wouldn't even say enterprise deal all the time, like a mid-market deal.
Right.
Also, one of the most important lessons that I've learned over the last 1.5 years is how, and this is going to sound so intuitive and obvious, but it's not obvious to a lot of founders because we're trying to build a business at the end of the day, how important your product is. Right? The more compelling your product is, the more state of the art, the more it pushes your customer in the right direction, the better your business is going to be. And so we didn't just learn how to sell up market. We added completely new parts to our product that solved huge hair on fire problems for our customers. And that was one of the biggest compelling differences. I mean, our close rates went up by 20% as soon as we took our, one of our new features out of beta and put it into full release. Wow.
Well, that's huge. And how do you relay the value after you sell them, right? Because onboarding is such a big thing. You're promising this big ROI. Everyone's super happy. How do you ensure that that aha moment on the feature side is getting recognized 1, 2, 3 years later?
This is something that we've gotten really good at that I think a lot of people undervalue and underestimate. We have a really impeccable onboarding process, and it's very diligent. If you're an investor, great margins still. Right. But as a customer, we're probably one of the only players in our space that handhold not just every company that we bring in, but every user that's on the platform that they bring in. Mm-hmm. It doesn't matter if you bring in 9 seats. It doesn't matter if you bring in 125. We do one-on-one onboardings with each individual person that's going to be utilizing the platform. And we found that's the only thing that works.
Mm-hmm. Got it. Well, Jon, thank you for giving us some of your time. Just a quick little canned questions. What's the best piece of business advice, talking about advice, that you've ever received besides go up market?
Besides go up market. There is one of our board members, and I won't mention names, but he built a unicorn in our space and has been down this path before. It wasn't a single piece of advice that he gave me, but he started doing something maybe a year ago that was completely unique to the advice that I would get from a lot of other people who haven't seen that same type of success. And it really changed me. It helped me personally as a founder. And I would bring up these problems to him and I'm like, hey, how do I solve these problems? What do I do? What do you think about this? And I would ask a lot of questions as I normally do. And he would always respond. He would be like, listen, the way you're thinking about this sounds good. You need to go with your gut on this, right? You need to go with your gut on this. You have the instinct. You need to confidently rely on that instinct. And it's something that I've never heard from anybody else before. It's you might think it's obvious, but you start to lose that faith as a founder because you have so many variables that you have to handle. And it didn't take one shot. It took maybe him telling me that 20 times before I was like, you know what, you're right. And as I started doing that more often, using my instinct, using my gut, not on hiring people or not on very pragmatic things, but on big decisions, we started succeeding further. And so that's something that I would advise all founders to kind of remember is that you're in this for a reason. Use your instincts, use your gut, make decisions based off of that.
Advice, the people giving you advice aren't listening to the countless hours that you're talking to your customers. They're not, talking to your employees. They're not listening, so it is. I mean, advice can be great, but should be taken with a grain of salt. And, following advice definitely needs to, because bad advice can kill your company. What's the best book you've ever read?
I'm reading it right now. It's called The 33 Strategies of War.
Whoa.
I've read 300 books, and this is my favorite by far.
Really?
Yeah.
What's one of the takeaways? One of the strategies?
Man, I can't say because it's my strategy now. I would just say,
okay. Well, you didn't have to say that. You could just say, could have been any of the strategies.
It's so compelling. I'm a huge fanatic of when you mix both history and business advice. And so I love biographies and autobiographies. And Robert Greene, who wrote this book, he also wrote The 44 Laws of Power, which I read a couple of years ago.
Yeah.
It's such a compelling book. I love it so much.
Yeah. Robert Greene's phenomenal. He's phenomenal. Jon, thank you so much for coming down. And how can people reach out to you? What if I'm an investor and I want to talk to you? How do I talk to you?
Just Jon, Jon, at Xilo.io.
Awesome. Thank you, everybody, for another episode of The Capital Stack. We drop an episode every Tuesday. So if you like what you heard, please subscribe, tell a friend, and we will see you next week. Thanks. Bye-bye.
Thank you for tuning in to the Capital Stack Podcast. Make sure to share this with someone you know that can benefit from this content. Remember to support this show by rating, reviewing, and subscribing. David Paul is the founder and general partner at DWP Capital. All opinions expressed by David and podcast guests are solely their own opinions and do not reflect the opinion of DWP Capital. This podcast is for informational purposes only and should not be relied upon for decisions. David and guests may maintain positions in the securities discussed on this podcast.